Hi, this is P.R. Sundar. Welcome to Dalal Street Week Ahead program. First, let us look at the US markets last week. Not about the US market, we'll look at the entire global markets. So, as of Thursday, I tweeted and I reported that entire world markets are bullish. Asian markets, so all the 3-4 trading sessions into 2023 bullish. European markets bullish, natural gas has come to 52-week low and natural gas has fallen 65% from the peak, and the European main problem is the higher gas prices, so that is getting solved. So, as of Thursday, there were only 2 markets in the entire world which were negative in 2023. Now, one is US market, the second one is Indian market. But what happened on Friday, the US jobs data or the non-farm payroll data, as they call it as, it came as expected, and there was a short covering rally in US and US markets, S&P 500, Dow, Nasdaq, everything shot up 2 to 3%. So, with this rally and as of today, even the US market has turned positive for 2023. So, in the entire world, there is only one major market which is in negative for 2023, that is Indian markets. Now, the US markets shot up 2 to 3% yesterday. So, because of that, SGX Nifty also shot up. So, SGX Nifty indicating 150 point gap up for Monday morning trade, but even after that 150 point gap up also, we will still be in negative for 2023. So, definitely 2023 has not started well for our markets. Although the first 2 trading sessions were green, but the remaining 3 trading sessions in 2023 was so bad that Bank Nifty is falling almost 600-700 point every day. And the second day it fell 600-700 point, recovered 300-350 point. Third day also again the same thing, fell 650-700 point, recovered 300-350 point. So, last 3 trading sessions, not only that markets are falling and markets were hugely volatile. So, this one was very surprising that in the new year, so FIIs continue to sell relentlessly, and in fact they are aggravating the selling even more. So, the last 2 trading session especially, so they have sold close to 5,000 crores. So, that is on one side. Now, coming back to the other side, so we will not be underperforming the world market for a longer period of time. At some point of time, we will catch up with the world markets. So, the entire world markets are optimistic in 2023. And things are getting better. Say for example, from tomorrow all the COVID related restrictions will be going away in China. And this natural gas price falling, the Russia is announcing some truce in Ukraine war. So, they are all positive things. So, coming back to our market, so our markets internals are very bad. So, there are only, as I always say, there are 7 heretic stocks, HDFC Bank, they have been very volatile for the past 1 year. It will continue to be volatile until the merger is complete. And ICICI Bank, which is coming under selling pressure after a fantastic run. And Kotak Bank, anyway for the last 2 years it has not been performing well. And Reliance Industry, anyway it has been consolidating between 2,500 rupees plus or minus 300 rupees for the last 1.5 years. That is also not going anywhere. And then because the US markets are down, Nasdaq is down, the IT stocks are coming down. So, in the last 1 year, and IT index has lost 25%. Just look at the price of TCS. When the Nifty was trading around 15,200, that's a last year low. Right? That time also TCS was trading around 3,200. Now Nifty has shot up from 15,200 to 19,000, now it has come back to 18,000, and TCS is still trading around 3,200 only. So TCS especially yesterday came under a huge selling pressure and it fell more than 3%. So in fact that was main reason why our market has fallen on Friday. So however, Monday with the huge gap up, I do not know, I am not a big fan of huge gap up and huge gaps downs. So huge gap up, the market will be sold into, the huge gap down, markets will be bought into at least some portion. So unless there is a very, very strong local news, then only the gap up will sustain and will continue to move forward. Say for example, Nirmala Sitharaman candle. So it went up, but it never came down. It was not a gap up. During the market hours only it went up, but it continued to went up, continued to move higher, never retraced. Because corporate tax is being reduced from 30% to 22%. It's not a small reform, it's a very big reform. So Monday we will be opening gap up about 150 point in Nifty, maybe 300 to 400 point in Bank Nifty. I was just checking the Indian ADRs traded in US markets. There is no so much of any enthusiasm. So in fact, Infosys, HDFC Bank and ICICI Bank, so these are the top 3 stocks traded in US markets. They are all up only 0.5% or maximum 1%. None of them is more than 1% higher. But of course, what has fallen on Friday, so even if that recovers, our market can go to 18,000 in spot easily. And right now the SGX Nifty indicating Nifty future to open around 18,100. So all said and done. So next week, the actions will begin. Monday, the results season begins with the TCS announcing the results, but TCS will be declaring the results usually after the market hours. So it's going to be gap up or gap down the following day. So maybe I'll just come out with some idea on Monday morning, some idea for trading in result season. So TCS, Infosys, HCL Technology and Wipro, all the 4 top index heavyweights in IT sector, they all will be declaring the results by next week. And Infosys again declaring the results on Thursday. But once again, Infosys usually declare the results after the market hours. Again, its impact will be seen only on Friday. So coming back to data, so yesterday the data was favorable to the stock market in US. So that's why markets shot up like anything. But again, from tomorrow I think the US markets will go for one day up, one day down jittery mode until next Thursday when the CPI inflation data comes. So US jobs data on the first Friday of the month and CPI inflation data on the second week of the month. So these are the 2 important data that we have to check for US markets. So let me check where they are expecting next Thursday. It's not only US inflation data. On Thursday, so we have inflation data from China, India and US. And China will come before our market opens. So I would say, at this point of time, China inflation data may not be very big impact. India inflation data will come on Thursday evening. So once again, just like Infosys results, so its impact will be seen only on Friday. So what is more important is the US inflation data. So let us look at the US inflation data. So there is last time core CPI has come 6% and this time so they are expecting 5.7%. So they are expecting inflation to be lower. And the general CPI inflation data, last month it was 7.1%. So, this month they are expecting 6.5%. So, once again, so if it comes as per expectation, so then it's okay, and even slightly higher than the expectation, again the US markets will come under selling pressure, but then that is only additional data the market will be jittery about. Then after that, straight away for the next Fed meeting. I think the next Fed meeting is sometimes in the first week of February, before the next month's jobs data come. So, our market, nothing to worry. So, our inflation data is always not really a big concern. Compared to US inflation data, we are far better. So, economic data wise, consumer price inflation data from China, India and US on Thursday are the key data to watch. And when corporate results, TCS, Infosys, HCL Tech and Wipro, and of course, HDFC Bank will also be coming out with results next week, that is on Saturday. So, but its impact will be seen only on the following Monday. So, the next week, the more focus will be on IT stocks rather than banking stocks. And looking at the open interest, so the month started with the highest open interest at 18,000 put option, but then markets were very, very jittery. So, at some point of time, people started converting that 18,000 put option into straddle. So, now the markets, with the 18,000 short straddle, I think the premium should be around 500 rupees. So, now the market, is expected to trade between 17,500 and 18,500. But once again, I tell you, right now, how to tell you, we are going against the global trend. So, which can change anytime. And second thing, corporate results. So, as and when corporate results come, the markets tend to move violently both the sides. So, therefore, there is no point in predicting the markets especially in the last 3 weeks of January series. And because all the results that will be coming, so they are all index heavyweights. So, definitely its impact will be seen in index. So, my expectation is that IT stocks should do well in this calendar year, that is 2023. So, we will see how they begin. And usually what happens, the Accenture, it's an IT company in US, so that results come well ahead of our Indian results. And as and when that Accenture results are good, so people expect good results from TCS and Infosys, so IT stocks usually go higher. But this time the Accenture result, the result was okay, but their forward guidance was very, very bad. So, because of that the Accenture fell. So, that is why now people are expecting bad results from TCS and Infosys. So, that is one of the reasons why on Friday there was a huge selling pressure in TCS. But in case if the results are good, or in case if the results is not bad, there can be a significant short covering in IT stocks, because last 1 year it is down about 25 to 27%, even the IT index. So, if there is any short covering, both IT stocks as well as Nifty can go significantly higher. So, all in all, with the gap up, so I will still expect next week Nifty to trade between 17,800, because it has made a double bottom around there. So, that should be a strong support. So, the range for the next week, my expectation is that 17,800 on the downside and 18,500 on the upside. A stock specific, I can give you a few stocks. Look at PFC, REC and HDFC Life and SBI Life. So, 2 PSU stocks, 2 life insurance companies, all of them are doing extremely well. So, the next week HDFC Life results is also due. So, hope you enjoyed watching this video. Thank you for watching.